Hello, family. I hope all is well with you. Today, I wanted to share with you a neat little exercise that I think will help you with identifying where you're at in the market. So, without further ado, let's go ahead and get started and dive right into this quick video. So, mapping structure. Has anybody heard of it? Okay, what is it? So mapping structure is pretty much what it is. You're gonna be mapping out the structure on the three time frames: your daily, your 4 hour, and your 15 minute. I put up a little cheat sheet right here to give you an idea on when it comes to the pullbacks, how far you should be mapping those out. And the purpose of mapping structure is so you can identify where you are in the market. So we all know that when you are in an uptrend, the market is making higher highs and higher lows. This is what you call a bullish uptrend, upward trend. And then when we're in a downtrend, we know that the market is making lower highs and lower lows. So the market is pulling down, you have your pullback and it's going lower and you pull back. Now, some people don't realize where they're at, and sometimes they have the perfect entry in the wrong direction. So I'm just going to show you how I map out the market. And then I'm going to show you, because it can be a little time consuming, I'm going to show you a somewhat finished product as well. So what you want to do is you want to find the lowest point in the market when you get started on this exercise. You're going to be on the daily time frame, and you're going to go ahead for this exercise. I'm going to start right here, and I'm going to stop right around here around this point. So let me go ahead and chop this market up a little bit so I can remember where I'm at. Perfect. And like I said, if you don't know what 90 to 100 pips look like for a pullback, grab your ruler and just measure from here to here. That's more than 100, so that's a good area. I'm going to take my poly line, and I'm going to start from the bottom as my starting point, and I'm going to go ahead and just literally trace the market up. Trace the market up. Now, the reason why I'm tracing everything at this point, because I do want to I want to show you what the market looks like between these high points, okay? And then most importantly, I'm going to skip that part. Most importantly, I'm going to show you why mapping is important. So this is like a general idea of what it looks like on the daily, and then we're going to go ahead and drop to the 4 hour. And then as you can see on the 4 hour, we have more pullbacks to map, and it can be a little bit more time consuming. I'm not going to open it up too much, but I'm going to show you what I do on the 4 hour, or what you can do that might help. And you're going to start in the same area as you did on the daily. Sorry, I'm going to pull this on over. And then you're going to start mapping it out as well. And don't forget, for the 4 hour, it's going to be about 40 to 50 pips. As you can see, as you start mapping everything out, the highs and the lows, the market will correlate with what the daily is doing. I don't know if you can notice that right now. It's not like the 4 hours pulling back all the way up here. No, it's actually aligned with what's going on with the daily. So I just did a little area for the 4 hour to show you what that may look like. And then when you get to the 15-minute, you're going to do the same. And remember, for the 15-minute, it's 10 to 15 pips. So this one is going to definitely be a little bit more time consuming, but you'll also see as well on the 15-minute how it correlates with the other time frames, the movements. It's not like this crazy move where you have the market exceeding that. So I'm going to back this market up a little bit to right here, so I don't have to look for my place. All right. And I'm going to choose a different color so I can easily identify which color corresponds with. So once again, 10 to 15 pips, same thing, mapping out the market. And when I say 10 to 15, I'm saying at least 10 to 15 pips. It just have to be 10 pips, because then you're gonna have so many lines that you're literally gonna be doing this almost like it's just too much. Just so you to get the concept. Let me go ahead and change charts so I can show you what it looks like, a somewhat finished product. Now, as you can see on this chart, I do have some lines dropped, some horizontal lines drop, and the purpose of that is because you'll sometimes get to an area where you're just not sure if the market actually broke above that high. And one way to help you identify if it made a higher high is to identify your highest point right here, drop a horizontal line there, and then wherever the market breaks and close above this line, that would be your next high when it does is pull back. So that's why I got the horizontal lines. As you can see, I've identified my high swing points here, my key levels, because with these arrows, because this is the highest the market had went before it pulled back. Now, because as you can see, there's only two colors on this side, the 15-minute is missing because TradingView will not let me go back that far. But as you can see in this area, there are all three colors are here. And one thing to note about mapping the market, why this will help you become better at knowing where you're at in the market, is as you can clearly see, the market was going up in a bullish momentum, and at some point it made its highest peak, and then it started to pull back before it continue up. So the last thing I would want you to be doing is buying at the wrong times. It's okay to counter trend, but don't expect to buy and buy up here thinking that the market was gonna don't expect to like buy right here and then take it up right here, take profit right here when it's clearly on the downtrend at the moment on that pullback. Unless you're swing trading and you're gonna wait almost 3 months before it get back to that point, then have fun at it. So this is why mapping is important, because it's going to help you identify where you're at. And then at some point in the market, you're going to have a true change of trend, a change of direction when the market gets to its highest peak. So how I finish this entire process, you will see that the market made its highest peak right here. And if I drop a line, a vertical line in the middle, from that point on, the market started making lower lows, lower lows, lower lows. Now you can see there was a true change in the trend. It made lower lows, and in between these lower lows, you have your substructure where you have your pullbacks, and at this point, you have your consolidation in the middle right here, and you also have your swing points. And then right here, like had this market broke and closed below here, this high point, then you know that you are back in a uptrend, but it has not broken above this highest point. So now we are in a downtrend, and we should be looking for sells unless you are on a pullback. And mapping is going to help you identify if you're on a pullback. So I hope this video helped somebody. Go ahead and do the exercise and share with everyone else some things that you learned from mapping out the market, because we're all here to help each other, and it's going to help somebody become better at market structure and identifying where they're at so they can take better entries. So that's my time, folks. Love you guys. Until the next one, I'll talk to you. See you soon. Take care.